Listen closely, because XRP is right now at activity levels we haven't seen since 2021. The number of transactions on the XRP Ledger's decentralized exchange has surged again after years of lower activity, reaching levels last observed when the price was around 80 cents. If this trend holds, we could be approaching a decisive moment, with the $2.80 to $3 range acting as a strong support zone. The market is positioning for its next move. At the same time, data coming in from major exchanges and on-chain metrics is showing exactly what we've been waiting for in terms of whale behavior and large wallet positioning. Looking first at exchange flows, XRP is behaving in a very technical way that allows for precise analysis. During the recent price climb, we saw a notable increase in sell flows to exchanges. This pattern played out clearly. Steady inflows into exchanges marked phases where profit-taking was active, and the shift began right around the $3 level. Once price broke higher toward $3.26, exchange inflows increased again, particularly in major venues like Upbit, Binance, and Bithumb. Bithumb, in particular, is interesting because of its unique Korean market behavior, where trading patterns can strongly influence short-term moves. Right now, we're seeing a textbook profit-taking phase from buyers who entered below $3, locking in gains after a sharp rally. That's why the $2.80 zone is holding so well. It's where recent buyers are still in profit, but not yet eager to sell. On-chain data adds another layer to this picture. Older coins have recently moved after long dormancy, a signal we saw on August 9th when a notable batch of aged XRP became active. Historically, such moves have often preceded local pullbacks, and indeed, after this activation, the price eased lower. Market value to realized value, MVRV, readings adjusted through the Z-score show that XRP's market remains far from overheated. This suggests there is significant potential ahead, with plenty of room before valuations become stretched. Network volume remains steady, not spiking dramatically, but holding a consistent base, a healthy sign that the chain's activity is sustained rather than speculative. The whale activity is perhaps the most telling element. On August 8th and 9th, large whale addresses became more active, coinciding with the recent price peak. Today we see another small whale spike, with much of that volume flowing toward exchanges, adding to the current selling pressure. However, the behavior of the very largest wallets, those holding over 100 million XRP, is key. For weeks, these wallets have been distributing, which historically makes price growth harder. That distribution ended on August 2nd. From that point, the market set a local low and began a fresh uptrend as these big players stopped selling and began accumulating again. This shift is critical because when these whales buy, price movements to the upside tend to be more sustainable in the mid-tier ranges. Wallets holding 10 million to 100 million XRP, there's been some light profit taking. Smaller large holders from 1 million to 10 million are holding steady, while the smallest tracked large wallets from 100,000 to 1 million XRP are still accumulating aggressively. This layered behavior paints a clear picture. The market has healthy accumulation at the lower tiers, balanced by controlled selling from the very top and mid-levels, creating a stable structure for the next leg up. The general network activity remains healthy. There's nothing alarming in the current profit-taking phase. It's a natural reaction to a rally from $2.80 to $3.30. The key question now is whether that selling pressure fades without any major negative news. If the selling from whales and large holders doesn't accelerate, the path higher remains open. Interestingly, despite the recent legal resolution between Ripple and the SEC, we haven't seen an immediate reaction in whale accumulation or exchange flows that directly reflects that event. This is a reminder that even the biggest news can take time to filter through into price action as large holders and institutions adjust their strategies gradually. For now, the structure looks solid. The $2.80 support zone remains critical, underpinned by both on-chain accumulation and the psychology of recent buyers. The network is active. The largest wallets have shifted from selling to buying, and smaller whales are still adding to their positions. If volume picks up again while maintaining this structure, the stage will be set for another significant move upward.